I understand people probably want to look at AMC and GameStop before I do anything else, so that's where we're going to start, hop into some Discord stuff, and then I'll follow through with my SPY analysis as usual. We'll take a look at the dollar and treasury yields, etc. AMC pushing higher today, setting a high of around 733, and huge topping wick, a halt caused during trading hours. Of course, and many will cry, crime, but you know, whatever. At some point in time, I did take this uptrend from the initial ABC push higher, and I just applied it to the below here and said, hey, it's possible that we could get this rally up. So at some point in time, in some video somewhere, you can go find it, I said $7 is probably like, you know, a good high. And it looks like we've gotten there. Cap, you're crazy. This is MOAS. And I'm like, are you sure it's MOAS? I mean, I'm gonna need more information to really say that. And there's a couple reasons for that. I understand that volume was pretty high. It really was. Implied volatility is rising, and the RSI it's actually not even up at 70 yet on the daily time frame, which is insane, but that's because of the strength of this downtrend. This was a big downtrend, and this bounce is countering that, so it's going to be also very big. Let's scroll back in time just a little bit. Let's have a little remembering here. This was another big solid green day. You can see volume was very low, and then boom, 2-3 big volume days. The price peaked and then came back down a little bit, but that's not the most dramatic example. Let's look at this one through here. This daily candle also huge. Another big push up on the intraday. At some point, this candle was green, setting a high towards 27.50. The price came down and came back up and then fell. And I sold actually at around $26 here and got out. So until AMC gets up to there, I'm not missing anything. And there's more examples too of these extreme rallies in AMC. You can see here again on the 28th of March of last year, another incredible surge in price just to find a top and be pushed lower. And yes, I called this top. And yes, I called that other top, and sure, sometimes I kind of missed. And I say, hey, I think this is the top, or I think this is the top, and then boom, and it's like, okay. The point being, though, is that this has not yet been MOAS. People like to criticize me for calling a top before they actually occur, and I say, yeah. And how often has MOAS happened? It has not. GameStop continuing to push higher alongside AMC. Opening up the hourly chart, you're going to see we had a wick breaking above this triangle that I've drawn here. This is getting exciting. It's compounding, and it's still not bullish to me. We have yet another arrow to drop here on our divergence. I think I need to change my style here. Take off the extended hours. I think that's where I had that divergence shown. Right, so we're not setting meaningful higher highs in the RSI as the price is setting higher highs. So this is a divergence. It's now a quadruple divergence. This is insane stuff. And remember, I am forecasting a big pump in the meme stocks, but only after the overall markets have corrected. That's as far as I want to go here on AMC and GameStop. I'm saying that personally, I am not looking for MOAS. If you're chasing a short squeeze, you're gonna get burned like so many other people before until it actually happens. If it ever happens. The house does need to create some winners to keep the players coming in through the front doors of the casino of the good old New York Stock Exchange. No thank you, I am done with the meme stocks personally, but I still cover them. I understand people like to. Alright, from here, let's go into Discord. OB1, well, correctly calling a short bullish trend and then a long-term bearish trend throughout the day on SPY. Excellent work, dude. He also brought up some interesting information on U.S. consumer credit changes. We'll be watching this very carefully. You can see delinquency rate on single-family residential mortgages is dropping. My personal experience has been that my fixed-rate mortgage actually gets easier to pay as inflation increases with my wages too, so I am very lucky. Inflation's been helping me, actually. And that's part of Jay Pow Pow's problem. He's got to figure out how to stop this this wage price spiral. I think it's really happening. I really do. Moving on, the United States delinquency rate in credit loans is increasing, probably due to the rising rates, right? There's a prime interest rate that is applied to credit cards, and that's going up, and people are not happy with it. Again, more research here by OB1. JP Morgan reporting that their delinquency rate in home lending is increasing. You can see in the fourth quarter of 2021, it was at 1.04, and well, the fourth quarter of 2022 was 1.45. So that's a pretty good spike. And also, here's another piece of information about consumer and community banking net charge-offs increasing dramatically over the last reported quarter. So excellent work by Obi-Wan here. We had a lot of charts posted, and there was something else too above. I should scroll up. I'm sorry if this is going to make you dizzy. Just bear with me here. Oh, yeah. I am ready to get hurt again, I say, as I'm like buying calls in SPXU again. I don't know. I guess I can't help myself. At any rate, here we go. This is what I want to show. Obi-Wan shared this Tuesday, February 7th. We have a couple of things coming out. Balance of U.S. trade. And, oh, look, Fed Chair Powell speech at 11:40 a.m. I don't know what time frame that is. Probably Central or something. And then Fed Bar speaks, consumer credit change. So there's a couple of key events here being reported or taking place tomorrow. Obi-Wan is all over that. We'll be watching them also because I am forecasting a pretty big stock market dump from this point on. And I have my reasons for that. I'll get into a moment. I also wanted to share, let's see here. Someone posted their gains from this account they started with $200. I love that stuff right here. This is great. Let's see, from 200 to 1700. Amazing. One time I did something very similar, and I wish I had taken profits a lot sooner because I returned about half my profits back to the market before I paid myself, and then I bought my new base and amp, and maybe you've seen that base on my wall in previous videos. Good day today on the Discord. Good times. Let's get to the charts here. We're gonna go take another peek at AMC because I am interested in what is going on after hours. Let's turn back on the after hours here because I'm not expecting a big push up. Ooh, that's a weird candle. Nasty low there. Nonetheless, moving into SPY, let's start with the ETF covering the S&P 500. There was a triple bearish divergence in this time frame where the price was setting higher highs and the RSI was not, and then the price did come down. I identified a bearish reversal confirmation level at 409. The price did go below there and push back up, and then again came to that level and pushed back up. So I'll be watching 409 very, very closely. Zooming out into the daily time frame, you can see that indeed the price is coming down. We now have a doji, a supposed bullish doji. Bulkowski has done some statistical analysis on this chart pattern, and when we get a confirmation close, we'll be able to put a price target on this candlestick pattern if we choose to. The takeaway here is that it's easier to push down and below this candlestick and make a bearish continuation than it is to pose a bullish reversal, and that is because the candlestick pattern is 2 candles long, so it's pretty tall, and this bullish doji occurs towards the bottom of that range, and so it's easier to push lower and close lower than it is to push through the entire height of the pattern. The RSI peaked at around 70, not quite there, just a couple days ago, a couple trading sessions ago. This was insane, and since then we actually have 3 green candles going down, and I have another bearish reversal confirmation at 393. What I've done is I've identified critical peaks. If the price falls below this 393 level, then this first actionary wave, this first push up in this uptrend can no longer be wave 1. If it is wave 1, then we are currently in a third wave extension, which is quite powerful. That wave count falls apart at that level. There's also another peak back here from December, which is another significant level for the Elliott wave count. If the price continues to fall below there, then bullish counts break down. What I'm currently showing are a bunch of ABC corrective moves higher, kind of a fractaling of measured moves up. Yeah, sometimes it's hard to get that plural right. Let's go take a look at SPXU, which is my favorite thing to trade right now. It's an inverse trading fund of SPY. So SPY goes down, SPX goes up, and it really is that simple. There is some divergence I want to cover. You're going to see I have a 100% move forecasted from before. We did reach that level, and getting anywhere above there, even up to 161.8% level at 14, would signal that we are in a new motive wave. What I see here looks like a corrective flat, and to me that means, hey, we probably have a big push coming up higher. When I go into my divergence study, what I see is that we've had a 200 period average surge in divergence. That's what this is showing us, coming up at around 99%, and now it's starting to come down. The divergences tend to decrease, as I say, the prices more closely correlate while the price makes large moves. And you can kind of see an example of that through here between February 1st and February 2nd, where we had big spikes and divergence in February 1st, and then towards the end of that trading session, we had some big moves which continued into the next day. And so what I'm thinking is that there may be a similar pattern here where, hey, we have corrective patterns that are occurring and that's causing this divergence. And once those corrective patterns finish and we get our next motive waves, we're going to be looking for more uptrends. And given, or at least in SPXU, strong trends, but an uptrend in SPXU, and I say that because I believe we are actually in a new motive wave in SPXU. I can zoom out a little bit here and show this larger complex zigzag. I believe we're completing this zigzag and we're about to head higher. It'd be nice to get up to this trend line. And actually, that reminds me, that trend line is kind of like this other trend line I have in AMC. If we do get a massive squeeze in AMC, I'm serious. Like if AMC pushes up higher, like 15 is the target. I'm just going to say that because it can do that sort of stuff. I mean, it has in the past, like it hit 72, 62. And then I took most of my profits around 55. So again, 26, I stopped out at 26. So no losses for me on that big push down. And I'm not really missing out until we get above 26 or 55. And the price is at $6.80. So I'm not sweating bullets, not at all. That was SPY, SPXU. I said we'd go over some other stuff like treasury yields. This is the 10-year treasury yield, and it is going up. We are pushing higher. I have had a bullish forecast on this, and I suppose that we finished the top of a wave 3, so maybe there was some consolidation to do. We could extend further by developing another set of motive waves within wave 5 of this wave 3, whatever it is. I don't know what degree it is. Doesn't matter. Let's go look at TBT. TBT is an inverse of bonds. So as bonds drop, the short side goes up. And what this tells me is that since about late October of last year, bond prices, the premiums at which bonds trade, has been going up. And the shorts have been hurting for it. And now as we see this chart reverse, the shorts making money as premiums drop, which is going to correlate with a rise in the treasury yield here. And it looks like we might have a breakaway gap. Important stuff here, really important stuff. I haven't looked at VIX in a really long time. Let's go look at VIX. VIX broke an uptrend forever ago. And I'm not even sure if I want to redraw that uptrend. Maybe I draw the strictest uptrend I possibly can. Okay, there you go. If this is the most strict, the most true external trend line, you can see that there was a little touch there, and so the price or the level of VIX is probably set to go up. Ron Walker, I actually really like Ron Walker. I know he's repetitive and some people don't like that, but whatever. He's showing a falling wedge through here, and that's not a bad analysis. I really don't think so, although I would take the height of that wedge and take it here, and I would characterize this as a 3-wave move, an ABC correction, in which we have wave C here at the end forming some sort of wedge or triangle, which right away has me going into the 1-hour chart and turning on after hours because I want to try to identify if we're in a leading diagonal triangle or an ending diagonal triangle, and that will be signaled by the overlaps of the first and fourth waves of the triangle. So I'm going to go ahead and zoom in really quickly. I wasn't really planning on doing this, but I'm just going to do it anyway. I want to try to keep this video short. There's so much to go over. So maybe we have a channel through there, but maybe we don't. I'm going to turn on my Elliott wave style because it's important to have consistency in the way you interpret your data. So you can see that my trend lines don't work the same, and that's because a line chart uses the close and not the open, high, and low close of a trading day. So here we go, and this tightens up my wedge, which is nice, and I can start to make my my triangle through here. I'm going to recolor these blue very quickly because I don't want to lose I don't want to make it confusing. I want to try to keep the yellow lines to be the smaller price moves. So is it possible that this is all wave 1? Is this A, B, C, D, E? I think so. 1, 2, 3. I'm going to go ahead and start labeling this too. Now, in an ending or leading diagonal triangle, you're going to use numbers instead of letters, and that's because it's inherently motive. Wave C of an ABC correction is motive. And if we are getting smaller motive pushes down, then that tells me that the downside pressure is alleviating, and the upside pressure is about to mount. So this is a big first wave. So 1, 2, 3, 4, 5. We have a big falling wedge, and if waves 1 and 4 overlap, we are in a leading diagonal triangle. And so I'm just gonna take, let's see, the peak of wave 4, and I'm just gonna pull it back somewhere around there. Let's see, right there. And this is where it gets tricky. Where's wave 1? Wave 1 needs to be, this is hard. If this is point 1, 2, 3, wave 4 should have stopped below wave 1. So this is kind of interesting because it doesn't have much of an angle. That is to say, the slope of the wedge itself is pretty shallow. So waves 1 and 4 are naturally going to be overlapping a little bit, but the incoming wave should be down. The incoming wave should be down from wave 1 because wave 4 it goes up. So the incoming downtrend is wave 1. Is this really the wedge from way back here? If this is 1, 2, 3, 4, then yeah, we've definitely got a solid overlap between waves 1 and 4. And this is an incredibly huge falling wedge. And I am just like shocked and amazed. Nothing but shock and amazement. Oh, wow. Wow. This is terrifying. I have some really bearish price targets on SPY. I think overall we're going to be looking for like 289 or something like that. I'm going to go into my daily zigzag chart, change my time frame. We'll have a look what's going on here. I did have the bullish theory pulled up, but I do like this chart because it is still inherently a bearish count, and we do have a push lower on the daily. RSI coming down, volume's low, implied volatility ticking up again, yet again. Wow. And I'm expecting the price to plunge down to like 321. Yeah. Jeez. I'm just gonna say it. I think that stock market crash isn't coming, and I think it's gonna take the meme stocks with it. And if it doesn't, I'm gonna get wrecked. That's okay. And that is okay. That is the risk I accept. That's all I have for now. If you didn't watch any of the videos over the weekend, go watch the videos from the weekend. They're really, really good. Okay, bye.